What is going on, everybody? Welcome on into today's live stream. Powell is currently speaking as we go live, but he's been speaking for like 25, 30 minutes, and he's not wrapping up, but he'll be done fairly soon. And then we'll kind of get the, it seems like the gist of the market's kind of been going, and let me tell you, it would suck to be short. Holy shit, look at SPY. From about an hour ago, less than an hour ago, when the Fed rate hike decision was announced, which the Fed did not do anything. Their rates are unchanged. They're staying the same. When that came out, you had a rip in 5 minutes. SPY went from 464.40 or so to 466.68, maybe call it 69. And then it just hasn't looked back since. New high of the day. We're approaching 470 on SPY, 470 on SPY, the S&P 500 ETF. Yes, this is now right now we're about $10 away from all-time highs. All-time highs. The Dow, I believe, DIA is hitting an all-time high. So, holy shit. Market's going for it, and it is certainly doing so in a big manner on some good volume, like we expect post a Fed decision. So it looks like we want to go higher. However, we start looking at these charts, like holy crap, these charts start to become pretty nuts. Here's SPY's daily chart. Do you want to get in the way of that? Absolutely not. But do you also want to go long SPY right now? Oh, that also is a little bit scary if you ask me. Either way, it's kind of one of those scenarios where you kind of have people who could be in both scenarios. Like, I think it could drop. It's too overextended to buy, but I'm not going to short. Or maybe I do short, get squeezed out. You see how quickly that can happen. So it's like, I don't know what the answer is. There's really not an answer. It's just kind of sitting back, let it do its thing, and we're here for the ride, right? But absolutely nuts so far how the S&P has reacted. And, we've got SPY just hitting 470 right now. We can pull up Powell's, I'm getting some news feed off that. He just said we're pleased with progress on inflation. Essentially, the details here was members, the vote was like 12-1, I believe, along those lines. I'm just going to pull it up. Or 12-0 for what they should do today, I believe. So essentially, they're all members are fairly on the same page. And, really going forward, if you kind of scroll through, they anticipate getting inflation to 2% will take some time, yada, yeah, same kind of, story there. But they believe that our policy rate is at or near its peak. That was a quote from Powell. He's not going to say rates have peaked. So that's almost him saying it right there. Well, we believe our policy is likely at or near its peak for this cycle. We've been surprised in the past. Anything can happen. So him saying anything can happen. Fed prepared to tighten policy further if appropriate. But, it seems like they don't have need to do that yet. So, they don't want to take the possibility of further rate hikes off the table. So it's a possibility, but not seemingly likely at this time. That's kind of the detail. That's kind of the gist, we're kind of getting off this so far. Not likely we will hike further. Then at the same time, 5 seconds later, he says that. So it seems like that's just the story. And either way, it doesn't really matter. We can talk Powell and say, oh, this means the market's going to go up or down. Who gives a shit? Doesn't matter. The market reacts how the market reacts. It reacts how it reacts, and it is what it is. Whether he says hikes forever or cuts for the next 6 years, The Fed swaps are pricing in more than 140 basis points of rate cuts by end of 2024, so about a year from now. That's the deal. So, they're pleased with the progress on inflation. Powell saying that they're pleased with that progress is a good sign, you would suspect. So either way, that's the details. That's the story. That's what's going on right now and all that stuff. Let's talk some charts. But what's the FOMO? Hey, I don't know how much it is FOMO. I really don't know, because I feel like I have not been plugged in because to people's views of bullish, bearish. But tomorrow we're going to get sentiment. And, you pair it up with what's going on. You have exactly the opposite of what was going on like last year, in October, really, in September, October. You have the exact opposite. You have rates that are coming down. You've got the Fed talking about, not cutting rates necessarily, but like it seems like that's where the market's pushing us. That we're likely to be cutting rates into next year. And so now this is part of the game of the market doing its ups and downs and whatever it wants to do, but well ahead of time. So it's trying to price in what it thinks is going to happen next year. And so based on what the market's seeing, it's like, well, time to get in now ahead of potentially cuts and a better environment next year. Now, if you go back through history, which I think is more important here, I think the bigger takeaway is this, and I'll find the chart if I can find it. It was going around, months ago and whatever. I don't have it in front of me right now, but if you were to go back through history, as SPY is now over 470, you would see that when the Fed starts cutting rates, like not saying they're going to cut rates, like when they actually start cutting rates, we've seen some pretty decent market drops throughout history, and many times it has happened. Now, it's not a guarantee. Nothing's a guarantee, right? But many times it has happened. And why is it the case? Because they're cutting rates for a reason. They're not cutting rates because everything is fine and dandy and we're looking great. They're cutting rates because there's a problem. They're cutting rates because, we may have tightened too much. Oh shit, the job market's in trouble. Now that's not the case right now. As of right now, it's not the case at all. But they're cutting rates because, we may have overshot now inflation. Maybe we are, going to go past our 2% target and we're going to see inflation well under 2%, which we don't want to see, which could cause more problems down the road. Those are the reasons why they would end up cutting. Some of the reasons why. Bank stress is in there potentially. There's other things that could happen. And if the Fed's cutting rates, we are likely in trouble. No guarantees, but it's probably a problem. And maybe they could kind of steer the ship and we can land this thing in nicely and it's going to be fine. But history tells us that doesn't always happen, and many times it's not the case. So that all aside, if we are looking at hikes or cuts, in let's just say March, I don't know, just kind of a generalized, we've seen that kind of getting tossed around a bit. Let's say that's the case. We can hypothesize that maybe there's a good run for the next couple of months, and then, risk rewards are not going to be great. So maybe that gets you an all-time high. Maybe it gets SPY 500. That'd be crazy. Maybe we get those numbers. But then at that point, in my head, I'm not saying to do this or anything, there's something to do. But in my view, the risk reward of being overly aggressive long is not that appealing. And to be honest, it's not that appealing right now, but it's not like, to me, it's not like, if you're in a portfolio, it's not like sell your portfolio type of move, SPY goes all-time highs. You can always make the argument that it's not a terrible time. If you had captured and played the cycle well, it's not a bad time to lock some gains or get a little more defensive, right? It's not a bad time. But, we're close. We're getting certainly close. But to me, it's like we need to do a little bit more, which I know it sounds like, oh my God, it's made a big move as it is. Yeah, in the past month and a half, it has made a massive move. So yeah, don't get me wrong. We are overextended as hell on the shorter term timeframes. But bigger picture, I'd want to see a break of all-time highs, send it, and then it's like, that's where I say there is absolutely no reason to be getting aggressive long right now. There's none. You ride the waves and just know that those waves could stop at any time. And as long as you're aware of that, understand that, your portfolio is going to be fine. It's not like the portfolio is going to go to zero, I guess, unless we have a massive crash, which is certainly possible. But if you are all in leverage long options for next week long, as we're approaching all-time highs, and we had a week of just a slap in the face, you are going to get absolutely screwed. I have done that before. I have gotten absolutely screwed. I will never do it again. I say I'd never do it again, but hopefully I'll never do that again. I'm sure I'll make other mistakes in my career, but that's the game plan. So here's SPY's weekly chart. A little downtrend action right there, which I guess we broke out a couple weeks ago. But yeah, I have this line right here, roughly, at all-time highs on SPY, and that's kind of where I put it in. I hope everyone is doing well here on this Wednesday. We got about an hour. We'll hang out for another hour, and we'll see what happens. Let's see if this move continues. And the thing is, it's like I'm looking at SPY over here on the 5-minute chart, and like on my other computer, and it's like there's no pullback. Like there has not been a pullback at all. This has been very weird, which is funny exactly why you can never guess where the market's going to go, because these are the types of days when you have a Powell speaking, FOMC, that, first reaction's the wrong reaction. The market rips up. Okay, let's go short, because now when it pulls back, we're going to make some money, and never pulls back. And so people can get screwed. And now you're seeing this. It looks like a squeeze out to me. It looks like just a complete squeeze out to me right now. And I wouldn't, even though Powell is technically still speaking, I believe, I don't know, it doesn't feel like this is going to reverse. Of course, feel is BS. It's just price action. But this has the feel of like people may have got in short because we had the big move up was the initial move, and the move down never came. So now you got all these shorts who may be locked in who get squeezed out, and then that's a push. Now, how much more can it go? I don't know. But as I speak, SPY is now 470.50 as we, it just keeps going to new highs. It's just, holy crap. It just keeps going. Manufacturing showing lots of weakness. Oil going down a lot. Concerning, yes. I think oil under 60 and my red flags are like, holy shit, going off. I think that would be kind of like a rough threshold for me. Oil's up a little bit today, but again, it was down, the past couple of days a lot, so. Bitcoin, here's Bitcoin. It's up 3%. It's reacting well. This also, if this move that we had from Monday gets erased, which it's almost erased as we speak, Bitcoin gets back up to 43.5, 44K. I wouldn't be surprised if that squeezes out, up to 45 to 47K, maybe 48K, somewhere up in here very quickly. Because you would have, anyone who jumped in short on this pullback now is wrong, could get a squeeze out, boom, right thing back to the upside. So we'll see. Silver and gold have gone massive today. Now, these have gotten destroyed the past 2 weeks after they hit all-time highs, or gold made a move for all-time highs and rejected horribly off of that. But silver came right back into this range that we talked about as this is a spot that, not a terrible, if you bought this from a technical perspective, not a bad buy, right? I see this, we bounced nicely off this level a lot. And it's now bouncing 3.5%. Now, will that sustain itself? We shall see. But a big part of that is because the dollar, DXY, that's a huge move on DXY, by the way. DXY is down nearly 1%, which it does not move that much very often. I've watched this now for months, and it very rare. A couple of those moves came a couple weeks ago. Came, a couple times in the past couple of weeks of this pullback, and happened a couple times back in here as well, but very rare that it moves this much. So it's a big move. We'll see if these moves hold, but so far so good in terms of these moves to the downside on DXY. And the 10-year is approaching 4%. Did it break below? It just tapped around 4. 10 years approaching 4%. We have not seen the 10-year at 4% since... below 4%, I should say. Since August. So, another positive, right, you would think, for risk on, for stocks, so the views and stuff. My suspicion was that Powell was going to come out and be like, try to walk the market down. I don't think he's trying to, from his, wording, has been trying to walk the market down. He's kind of doing his thing. However, the market goes too high, there's going to be some incentive to try to walk it down. So DIA, by the way, is at 371.02, the prior all-time high. I have a blue line here. We broke that. Now, that's on DIA, the ETF. The Dow Jones Industrial Average itself, I believe, it's got to be up there. If not yet, broke a new all-time high. That's a new all-time high on the Dow. On the DJI, it is broken a new all-time high. So there you go. New all-time high on the Dow. Believe it or not. Like it, don't like it. There it is. If you had played, this is what kind of pisses me off now. You got to play. You got to, there's a subjective component, and that sometimes hurts you. Sometimes it helps you. That's just trading in general. I think the reality is that I've gotten much better about protecting my backside, and so I think it's a positive. However, you had a very nice little flag right here on the Dow that broke to the upside. Did I want to take that? No, because of what was coming this week. You just didn't know. Anything overnight, you could have gotten screwed. So it didn't bother. But today, what I missed, and here's why I missed it, was IWM. Now, it's not like I'm regretting it massively. There's other plays. There'll be other plays. But check this out. IWM right here, 188 or so breakout. I mean, this was a monster move. It's already moved $5 from that point, which is insane. But how did it break that level? It broke that level on the reaction to the Fed keeping rates where they were. Knowing that, I was like, okay, well, it broke out. But knowing 30 minutes later Powell's going to come out, I still just can't buy that. I can't buy that breakout, even for a swing trade. In this case, it worked beautifully. So you look back and say, man, there could have been some good opportunities, but the risk, in my opinion, was a little too large for me to take. It's just with news, with headline risk, it was not worth it. So I decided to just avoid that and leave it alone. However, I did just enter Amazon. So this is another one that I entered in just now. And I got in Amazon pretty much, a few cents below where it is right now. Now it's somewhat of a, early entry, but it is breaking the bulk of the consolidation. My view on Amazon is it's been consolidating for, about a month or so and breaking 149. It did break it earlier today, then it came back down. Now you're going to get the confirmation. Hopefully it closes over 149. We'll see. But stop loss will be just under, I believe, today's lows. If you fall back under that level, I would get out. So a tight stop, very tight stop in my view. And then I think legitimate targets are up towards 155. Could take profits on the way up, but here's the weekly chart. Weekly chart looks very good as well. We'll see where this weekly candle closes. We'll see where the volume comes in today. I'm very excited to see how that shakes out by the end of today. But I think Amazon, check out the volume profile here. Where do we see this to be? I think the bulk of the potential gains. I think you've got good range to 155, which is like right here, which is just underneath this high volume node, which comes in, 159. So, it could go for more. It totally could. It could totally disregard this shit as well. Only reason why, a lot of volume up here. So I'll play it. Tight stop under today's lows for the swing, but I'm not looking for all-time highs. I'm looking for, a nice, $6 gain type of situation with a risk of $2. Risking 2 to make 6, pretty good risk reward to me. It's like a 3-to-1, right? Now maybe I'll take some partial profits along the way if we, but the general gist of the play is that. So that's the only thing that I added new. Concern there is that it's not the strongest. Like IWM was stronger, SPY is super strong, so it's not the strongest. But if this move holds, or if Amazon does continue to push and breaks out, it looks like today you're going to get the volume. I would suspect. I think this next hour you get some good volume. We're not there yet. 34 million shares so far today, 45 yesterday. You push up 50 million shares is kind of what I want to hope for today on Amazon or more. We'll see how the next hour goes if it can get there. But we'll see. That's the only one that I took on that. And not like it's going to make or break anything, it's just a trade. That's my view. Just unsure exactly what to do. And I think that the thing is, if you feel like that, then it's going to feel like, and I feel like this all the time too, it does kind of suck because you feel like, oh my God, shit's ripping and I'm missing it. But But there's no rush. Like, it's going to be here tomorrow, next week, next month. When you got a good setup, you take it. That's as simple as that. I do have that feeling almost in my portfolio. However, here's what's going to happen in the portfolio. I'm not going to be here Friday, so who knows if this holds up and whatever. But here's a portfolio for today. Portfolio is at 14.4 right now. So I have it zoomed out enough so you can kind of see all the positions and whatever. But I have some stuff in here. Jets. I have an 1850 covered call on Jets that expires this Friday. If we jump over to Jets, I believe Jets is at 1866. So if the move holds by Friday, or at least Jets holds up, 17 cents. It could fall 17 more cents and I still get taken out. If this move holds, though, I'm out. So I'm going to lock in my gains on Jets, which will be, what is that, 20-ish, 25%-ish, roughly in the past month and a half, which is sick to me. I'm taking that to the bank. So I'm going to lock that in. So we're just, we're lowering our risk, right, by locking that in. I'm also going to lock in Labu. If XBI stays up this high, I'm going to be locking Labu in. Those shares will get taken from me as well. If XBI stays up over, I believe, 82, those two covered calls prior to the split will get, now that they're just a post split, whatever, they'll get taken out. So I'll be out of those. And then, so that'll be gone, which is going to, free up some more buying power and deleverage the portfolio a bit. Jets, BITO, nothing there. SLV, nothing there. ARK, I have a 54 call for Friday. ARK could. ARK would have to move like $5 from here to Friday. It'd be insane if it did. Chances are that that's not going to get taken from me. And then BITO would have to go to 23. It'd have to make a $2 move. So chances are those don't have. But it looks like I'm going to be selling my biotech exposure and my airline exposure. Those two sectors. Now, again, look back at these charts the past month and a half. I've been in these things the past, XBI maybe a bit more, but Jets kind of, honestly, about the same amount of time. So now I didn't buy the bottom. I was starting a dollar cost average in here, right? But now we're up nicely. So I'm going, and I still cover calls. So we're going to lock that. We're going to lock those gains in. Same thing with Jets. We're going to lock those gains in on Jets. We got this return to mean to a degree, locking it in. And that's it. So that is kind of like what's going to happen there. And then, if this keeps going, great. More covered calls to be juicing up next week. And the plan is I'll probably look to sell if this move holds, right? Let's say we go freaking nuts and we hold up on into Friday, whatever happens. If that occurs, my plan is then, this isn't like super active trading stuff. This is just my portfolio. Then the plan will be to sell covered calls out 2 more weeks, which will put you to the end of the week of Christmas. So like end of Santa Claus rally time frame, which, I'll be a little bit, I'm not going to be aggressive, but I'm going to say I'll put those out there. Hopefully premiums are decent. We'll see. And if we get some bigger moves into there, there's a good chance that I'll be locking in some more of these things and, lowering my, my risk substantially and my market exposure as the thing goes up. So that's the plan. Nothing super insane, but that's just the gist of what I will be planning to do in the portfolio. So, looking for bull flags and bulls. Yeah, that's where we got to be. That's where you got to be looking right now, I think, for sure. And I think you got Amazon as a really good candidate for that. It's just been consolidating for a while. Now, it could totally break down. Either way, this is going to be a good move. If this is a false break to the upside and it goes, going to be a nice move. I'm not going to play the backside because, again, we are trending up hugely in the past, year. I will not play the backside on that, but still a decent opportunity for a fake out. Could do it. You could. I'm not personally one to play that, but you could. My biggest not pissed, but my biggest, one that got away is Apple. Here's the play. Like I talked about this before. Again, you would have had to hold through CPI, PPI, Fed, and Powell. And so I just didn't want to do that. But you had the bull flag break. I got in here 193, chopped myself around a bit, but then eventually stopped myself out a couple of days ago. And then it just really, all it did was back test the break and go. The problem was I was like, is it worth holding through CPI or whatever and seeing Apple open up down here underneath my original stop loss? It was just too close to my stop loss, I felt, to take the risk overnight. If I'm up humongous, and it's nowhere near my stop loss, obviously anything can happen. I'm more willing to hold overnight because generally speaking, okay, it gaps down a few dollars and I'm still okay. It gaps down a few dollars there. I would have lost more than I wanted to on the trade. So I just made sure I didn't want to lose more than I planned. And that was really all it was. Although it looks like it's going to work. My targets were up near 199. It hit 198, so it got pretty close. Maybe it gets there, maybe it doesn't get there. We'll see what happens in the coming days on Apple. But, Go out of maxi, almost have my money. Nice. No, yeah, I don't have any interest, to be honest, in the Bitcoin side of things, and especially even, biotechs and even I don't really let them do their thing. Maybe there'll be some bull flags setting up or whatever in the coming weeks, I guess, but I just not really interested after some of these massive moves. You grab a piece of it and then you move on and then you look for someone else. That's really it. That's how I view it. Silver's up 4% now. Geez, gold's up 2% roughly. Big move there. Like I said, I think the gold and silver charts, big picture, we're talking months out. I think they look pretty good. Gold needs to confirm back up over this break of highs, but the prior all-time high. But it does look. I think it looks pretty good. I do. So benefit from the market going up, which I feel like I'm not agreeing. Yeah, well, if that's the thing, it's just I think that's a good lesson, and in my view, something that I've come to learn the hard way too. A good lesson for, you can't control it. You can think this, it doesn't matter. You could fight it all you want mentally. So when you come to that point of just completely giving it up, as in, I have a strategy that I operate and I just do the strategy and the market does what it does. You kind of feel a lot more free from the pain that is associated with whatever happens, because there are so many times in 2021 and 2022 even where I was long as we're going down, and we'd go through a CPI, we go through a Fed, and we'd have the opposite, a huge move down, not a move up, a huge move down, and I'd be like, that's how I'd feel, and that then threw me off. So I wasn't able to think clearly, or I wasn't able to think the same about what was happening right now. And so I missed out on so many opportunities on the downside because I was just not agreeing with that. Now, what I thought was going to happen last year earlier is happening now based off sentiment and whatever. But am I now thinking about it as if, yes, like I'm right? No, because I positioned the portfolio. If I was thinking the same way, now I would have been long options. I would have been long everything, 3x leverage. Like that's what I would do, but I'm not doing that now. I'm just going to ride the waves and just be smart about when things get overextended, when bullish sentiment gets very, very high, bearish sentiment is very, very low. When those things all happen, I do this. And when we get the opposite, I do this. And so it's just more of a systematic approach. And then you kind of ride the ups and downs of the market, and they can't hurt you. They're not going to hurt you as bad, and they're not going to mentally rip you apart to shreds because you just kind of operate your strategy. I think to a degree, you have to expect the unexpected. And I think what's insane about the market now is that this move is pretty incredible. I mean, the move that we're seeing is just pretty incredible across the board the past couple of weeks. But again, who knew? There's no way to know. And so just let it play out and let people who think they can time the market and call where we're going to go do that all they want. Some will be right, some will be wrong. I just don't care to do that. I know I don't need to deal with that or worry about that or think about that to have a strategy that works, that could pull money out and cash flow and do everything that I want to do, that I need to do. If you want to try to become the next best stock market caller, then that's, something that you can try to improve on and care about. But I don't care to do that. It does not matter to me at all. I got my gold and silver. Yeah, those look pretty good bounce for now. We'll see if it holds though. Support on the dollar. Let's see. DXY. Let's see. Well, it's under 103 on DXY now. Yeah, I mean, down around 102.50 is a spot. 102.50 would be a key area. That was a spot that we bounced off of nicely just recently, a couple weeks ago. So 102, we're not that far off. We're 40 cents away on DXY from that. But DXY doesn't move. It should. I say it shouldn't. It generally does not move a ton. It doesn't move super aggressively. So this area will be key for now. And then I think beyond that, 101 or so will be next. Maybe there's some more around 102, but 101 will be kind of important next beyond that, I think. That's exactly how I feel. No, because I felt it too. I have, that was me not that long ago. Seriously, I felt the same way. And then it just threw me off from how I'm thinking about things. Got to work on psychology, the various bias. Well, I think the thing is, it's part of it is like just honestly time. I think everyone's different in terms of how they handle things, first off, but in how long it takes to process certain things, and the pain of this eventually will catch up, and eventually you feel it, and eventually it changes your actions. But what I'm more so, here's Spy, by the way. Spy popping up. Did Powell finish his speech? He ended press conference at 2:15, so 10 minutes ago. So since he ended, the market's actually come down, funny enough. So Powell stopped talking, the market's coming down. Imagine this. Imagine we get this full unwind and just would be insane. But as I have come to senses and as time has gone on, I think about things a lot differently. And one of those things that has changed, in my view, is that I really think that there's some aspects to the psychology game that you literally can't be taught until you do it. And you have to feel it, and you have to experience it, and then you have to experience the other side. So you have to go through the shit, and then you have to experience a little bit of positive. And then you have to start recognizing, and this is a lot of this is subconscious. It's not like it's when you step back and think about it and try to study it or examine your performance or this or that, it's obvious. Oh, I shouldn't have done that. I shouldn't have been thinking this way. Yes, but in the moment, it's not as obvious. It's never as obvious in the moment. And so a lot of it really comes down, I think, to you being in the game and experiencing it and having enough losses or enough situations arise where you think a certain way and it screws you. You think a certain way and it screws you. You start thinking one way and it works. And then you zoom back and you say, okay, out of the culmination of this year, or this month, or this week, whatever the time frame, when I felt better, I felt more in the zone or whatever. When I've been thinking this way, things just kind of flowed easier. I was able to handle losses a lot better when I was feeling or thinking and viewing the market this way, viewing my trading this way. And so you think about things differently. I really think. And then you implement that slowly but surely in your own trading and your own experiences and your own outcomes. And that's really what it's not. I wish that's why people say, it takes so many X number of years and then I turn profitable, because you have to have the experience. I think the past couple of years, the market have been great because you have seen the stock market go on easy mode for a period of time back during the pandemic and stuff. I guess the back end of that, 2021. And then it's gone on hard mode for 2022. And now I don't want to say it's easy mode because it's not, because it's done quite the opposite of what a lot of people thought it was going to do so far this year, or I guess throughout this year, a lot of this year. But it makes you realize, like, wait a second. Easy mode, hard mode, doesn't matter the mode. I have to figure something out that will work no matter the mode the market's in. And despite the modes that the market's in, when we are in a mode that does not align with me very well, that's where risk management comes into play. And that's totally fine. And I'm okay with that because it's going to be a part of the game. And then I know when things align, I'll be back and I'll do very, very well. So it's really a mental game a lot, but I think the technical aspect is quite simple, but there's so many ways that can work. So it's not worth like getting upset about, oh, I use the RSI, or I use Elliott Wave, or I use this, or I use that. No, you can figure out something that works. And now the game becomes you operating that strategy, managing risk with that strategy in mind so that it keeps you in the game. And then you can net more wins or gains than losses. Net. Doesn't matter if it's wins, losses. It could be, you could have a 30% win rate, but still make more money, as long as you operate the strategy that makes sense and that works, right, for that win rate. Yeah, if we do end up kind of falling under a VWAP and sending it to lows, that would be hilarious. But it wouldn't be super surprising, I guess, on Fed days is what we kind of suspect. However, Usually the move down or the bounce back up or down, whatever, after the initial move has happened by now. Because Powell's done speaking. Usually once Powell stops speaking, the market's kind of got its trajectory and it starts making just that push into the close. The bias to me is always dictated by the charts. Always. So if I like to look at SPY, QQQ, and IWM for the bias, like as a general idea. Now when I say bias, like it's a chart bias. It's not my bias, it's just a chart. So like what the bias has told me, right, is that yes, SPY is in consolidation. In the past couple of days, it started to break out that consolidation and push higher. Now, did I play that? Could it have been an amazingly lucrative trade? Yes. I did not play that because I'm sitting here saying, well, I just don't want to hold through CPI, hold overnight, hold through Powell, and then get wiped because I know what could happen. It could, doesn't have to. And that was just me making that call for myself. There'll be a million times where SPY does this type of setup again, up or down, and then there's no Powell, there's no CPI, there's no PPI coming up, and I play it, and it works, and it does well, or it doesn't work. But I just didn't want, knowing what can happen with these things, I did not want to lose because of a Powell or a CPI or someone saying some bullshit versus just the chart not working, you know? And if I guess they kind of go hand in hand, they could, but I was like, I'd rather just take the trades and play the stuff that I play my setup. And if the chart doesn't work versus, oh, CPI came out and spiked us up or down and I got, I lost because of that. My stop loss got hit because, no, just let the market do what it's going to do. And that's what I wanted to let happen. Try to match the mo with the mood. Sounds really good advice. I'm going to figure out ways to control my bias. Yeah, no, the bias side of it, it throws you off because subconsciously, and I have been there and even sometimes still fall into this a little bit, like you wake up, I check futures when I wake up sometimes and I'm like, there's a period of time where I was not at all. I literally wasn't it for a while. But now I have kind of fallen back into a rhythm of like one of those things I do fairly early in the morning is check futures just to see. Not that I'm going to make any moves or do anything, but I'm like, let's just see what's going on now. What happened overnight? And you wake up and that red or green, whatever you see, hits you and you feel a certain way subconsciously, which then affects your day and it could affect your decision making for that day, right? Which I don't want that to happen. It's not ideal. So for me, it was I just switched my style for sure. And that has helped a lot the past couple of months, I'd say. Powell pumps slowly. Well, I mean, still up. The S&P or SPY's up about 1%, which is still a decent amount. And even if it does kind of bleed off the next 30 minutes, into the VWAP area, let's just say, maybe it goes beyond that. If it does, it's still up nicely. And the grand scheme, right? We are pretty overextended on the daily chart. So while, yes, we have broken consolidation here, it would not surprise if we get some sort of, going to happen. And the more we keep extending, the higher that likelihood is. No one can tell you when it's going to happen, but the higher the chance is. My suspicion would be, if it's not now, and if it does keep sending higher, we're probably going to get something soon. I don't know. It could be totally wrong. I don't think we're going to just go straight through all-time highs from here. Can we do that? Is that possible? Yeah, yes, but that would be a freaking move and a half. Holy shit. Imagine if we had a consolidation break at around 460 and SPY goes from 460 with barely any pullbacks right to all-time highs, 480. Oh my God. That would be nuts. Could happen, I guess, but that would be nuts. So maybe your Santa rally or your December rally pushes you up towards all-time highs, and then we get a consolidation phase at the end of that. Maybe that's not enough. I don't know. If we had held through SPY, be at 420. Well, that's the thing. The times that you don't hold through these news events because you're trying to be smart about your risk management, like this, but that's part of the game too. Like you could sit back and go, fuck, like I didn't hold my Apple trade, or I could have bought SPY or IWM, but I just didn't want to because of, CPI and Powell and stuff. And this week of catalysts, I didn't want to do that, right? The times you don't, it works. And then in this situation, right, is going to test you again, because it's going to happen again. Maybe it's next month. The same thing's going to happen, right? Maybe it's going to be an earnings report. Maybe it's going to be Powell speaking. Maybe it's going to be a CPI. It's going to be whatever. And you're going to say, wait, well, last month I didn't hold for this and I missed out. Guess what? This time setup is so perfect, I'm going to play it. Guess what's going to happen next time? It's going to kill you. It's going to do the opposite, because the market does not always do the same thing. So you have to fight the urge again next time to have to do the same thing and not hold through that, or not, respect the rules, respect your own rules, right? That's what you're respecting yourself is all it is at the end of the day. Believe it or not, though, the S&P pop, but Microsoft is not doing well. Adobe's at earnings today, so I shouldn't use that as an example. Microsoft is actually red. Jeez. Microsoft getting absolutely crushed. Not really, but relative to the S&P, right? Popped up off the lows, consolidated here, couldn't break the VWAP. That's an example of a stock, though, that was just relatively weak, right? On the day, it was relatively weak. You got to bounce up to VWAP after the, Fed stuff, and then couldn't break VWAP and just sent it to the downside. What's that daily chart look like? I mean, honestly, with that daily chart, who knows, right? This is just, again, this is why this is not an interesting chart to me. It had a massive move, never consolidated the way that I want to see a setup consolidate, so it wouldn't have been a trade. And even this, is this a breakout trade? I find it hard to play those. After you just had a breakdown, it could just be kind of setting up for that bear flag. Could be. So I don't play that stuff. And so it's just kind of one of those. I just haven't had any interest in Microsoft, so I've been leaving it alone. Let it do its thing. Hoping oil comes back. 500 end of year out of the U.S. market. I would 500 end of year. Yo. 500 SPY end of year, because that's 2 weeks, essentially. A little over 2 weeks. Yeah. SPY would have to go another $30, over $30 from here. It could, right? But if that occurs, there's a very good chance I would agree with that. I'd probably be, if not out of everything, I would be selling a large amount and then just slowly, just like your dollar costing, averaging on the way down, just trimming on the way up. Eventually, you're going to get caught in a pullback, but I'm fine. I'll get caught in a pullback. I don't give a shit with just, total stock market exposure versus, versus leverage and versus, ARK and leveraged XBI and this and that. I don't want to have all that shit as we're blasting off. I'll get caught in a drawdown, trimming out of my last, 100 shares of JEPI, you know what I mean? So that's fine with me. So SPY didn't really come back to VWAP. I mean, not that it really matters, but it's starting to bounce back for now. Hit 470. We'll see if it can close over 470. Not that it's a psychological level. But here's the SPY daily chart, by the way. So here's the I'll say not a concern. I don't know what I would want to say, but here's what's important, I think. Volume right now. If we just stop trading right now, we're pretty much, par with the volume we've been seeing the past couple of days. We look to be on pace, it seems like, for a high volume day here, because we still got, over 20 minutes to go. And the heaviest volume tends to come in the last 10 minutes. So it looks like this volume candle will probably be coming up and testing Friday, maybe even testing December 1st. The past 2 Fridays have had very high volume. So it looks like we're going to be up there, maybe testing, if not breaking above that, which notable because, again, pushing to highs on high volume is a strong move. If we did it on small volume, low volume, but doing it on high volume is a strong move. So does it mean we have to go higher tomorrow and the next day? No, but it's generally a good move and a good sign. So we'll see. We'll check out QQQ. QQQ, volume-wise, is already above yesterday and Monday's volume. So we look to be setting up for some high volume days here. DIA, the Dow, as it's making a new all-time high right now on DIA, I would suspect, yeah, we're at yesterday's volume. We're going to probably be up close to some of these days, which were some pretty big moves to the upside. IWM breaking out to the upside here. Massive flag breakout there. Massive move. I didn't play it again because you would have had to play it. You would have had to get in before Powell started speaking. Just not going to do that. It's a break in a rule, right? Not going to do it. But already huge, not huge, but like already very nice volume there. So you've got the confirmation of volume on that. So it's good signs. Now I just want to make sure we can double check across a bunch of these, stocks we're looking at and stuff and where the volume is. XBI up 4.3%. Holy shit on volume again already. We still got 20 plus minutes to go. Massive candles there. Massive. Oracle, let's take a look. Let's take a look at Oracle. And then APA. Oracle off the earnings recently, gets dumped, but now it seems like it got hit this morning and then snapping back. With the market being so strong, it's tough to not go up. Well, I guess Microsoft is being a good example of that. I guess you don't have to. APA. Well, the thing with this is like, it's just tough when you look at this because like your key is oil, right? Like this chart looks very much like how oil has looked to a degree as of late. So yes, while it's bouncing up, it's up almost 2% today. You got a pretty nice downtrend. So you'd want to break that. So I'd want to see this thing regaining like 36 and ideally 37. Getting above these levels would look great, And that the thing is, it's probably going to take oil to regain like this area right here. It's going to need to regain 72, 73 for that to happen based off what I'm seeing. So that's kind of what I would be looking at. Back in the green on XBI. It did take a pretty big dive, but like we said, like it can move so fast, which is why I like in the future, I'll be playing just XBI Labu because I didn't have a ton of buying power and XBI was a little too expensive to sell cover calls. So I went with Labu and I played it small and then whatever. But this thing dove. It's just the same. It's such a, not that this is an unbeatable, like you can beat, the concept has its flaws. But dollar cost averaging into, let's say maybe there's more of a percentage I'll apply in the future. But let's say that 60% of my portfolio holdings are in, total market ETFs. Let's say a SPY, an IWM, a QQQ in a perfect world. Or income ETFs in this case. In the future, once I can put more money at it into the portfolio, it's going to be SPY or QQQ or IWM, and probably a combination of the three in multiples of 100 as my portfolio buying power allows. But outside of that, there's, I believe maybe there's this is again me talking for now, maybe a 10% cushion of holding cash / hedge. I leave 10% for hedging maybe purposes. And then I leave, so that's 70%. And then the other 30% is diversification across different sectors. Maybe I want to get some silver exposure. I want to get some bond exposure. I want to get some other ETF sector exposure. But I will do that in a way where I buy in with that 30%, but I buy in to the weaker names or the weaker sectors, right? So in the example, XBI the past couple of months, going in September, October, and even really into November, like this would have been the time of like, okay, and I was doing it for Labu of just kind of dollar cost averaging, easing into this and then holding. I'm not against holding that for a while because again, the market the market could have done this, right? And we could have been even lower. But I'm okay with that, knowing that this is a pretty volatile ETF, and with the ebbs and flows of the market, this thing can easily get back up, and I can sell covered calls in the meantime and just kind of, accumulate some shares and let it do its thing. And when it does return to mean or have a nice push for a couple of months, we can get out and we can trim out of it and let the covered call, rinse and repeat. So you have a slightly active side of the portfolio versus, your longer holdings or your long holdings. You're not touching those. Like once I buy 100, unless, as we say in this, as I've been saying, unless SPY goes to 500 plus in the next couple of weeks, okay, I would consider it selling that, but there's no reason to sell that stuff right now. No reason to sell SPY in general. You can mess around with it, the ups and downs, and if you're selling covered calls, you're cash flowing more than you would, so we'll see. But yeah. 10-year play, 10-year plus play. Yeah, nothing to worry about there. I mean, and honestly, we'll see how small caps do relative to the S&P, but there, a lot of small caps in the biotech ETF. You got value. You got much better value here. For sure, like 10 years down the road, you would suspect that you're going to have your ups and downs, obviously, but decent value compared to SPY right now, or SPY's at almost Dow's at all-time highs, right? Would I rather buy the Dow or would I rather buy biotech? Now, I would buy the Dow for a trade because it's got momentum, so I'd be looking at that for more of a trade. But if I'm looking for better value and stashing money away in a portfolio and not looking at it and caring about it, I'd look at something. I would want to buy the weaker stuff. Yeah, if you're doing that with stocks, well, that's the problem, because then you have to go through every so often, every couple of months, you got earnings on stocks. And so you can dollar cost average until all of a sudden, holy shit, PayPal had a massive destructive earnings and it's down another 30%. Well, now I added too much PayPal too early. Like, you can't, it's tough to do. Like, it's tough to do because you don't know. You could have, you're one earnings report away if you're playing. And I was doing it with stocks, here and there. And I felt that exactly that situation. You're one earnings report away from I don't want to say a 50% cut, because you're probably not buying, those types of stocks. And if you're dollar cost averaging, you're an earnings report away though from a 5, 10, 20% pullback or correction in your holding that, and that's just too much. Yeah, then you have to dollar cost average further. But then what if it trends down for the next 3, 4, 5, 6 months? You're in trouble. You're going to be down more than you need to be down, versus an ETF is not going to have that type of volatility. You're just not going to have the volatility like that. So your downside is not going to be as crazy, and your upside's capped, yes. But I don't care about capping my upside to a degree. Now, it's not capped like, oh, I can't go above this. But like, if let's say you buy QQQ versus Apple, right? Apple could go, or Nvidia could go 100% in the next year. It could, right? Chances of that happening are low, but it could. And QQQ might go 40%, or 30%. So you miss out on that potential opportunity. But same thing on the backside. If Apple drops 50% next year, QQQ might drop 20%. It's not going to drop as much. So you're protecting that. But my view is, well, if I sell covered calls and I cash flow it, my cash flow is going to pay me nicely every month or every week, year, whatever the time frame your cash flowing is. I'm going to cash flow nicely, and I'm going to have the exposure, so I don't have to really. I can suck it up if we do get a crazy move and I miss out on what could have been on individual stocks. I'm still going to get good gains, and I'm going to get good cash flow as well on the position. So I don't really care. It's just a more of a longevity approach, is what I would say. And if you're going to be in stock picking, you got to know fundamentals. And not that like you can't, I have no idea what I'm talking about with fundamentals, but it's not a strong suit, So I'm not going to try to force something that I'm not necessarily good at. Or that is a different, because the problem with that, is if you get into that, in my view, you start getting into the game of now you're thinking too much. You could find yourself thinking too much. And so you do all the research. You find the stock that you think is going to be a 10x. Like, it could be Cathie Wood, right? And maybe she ends up being right in the long run. Who knows? But because they're, what's their time horizon? 5 to 10 year plus is their time horizon on these stocks. But you do all the research. You do what you got to do. And then, you get in something, and then it has earnings. Earnings gets slashed, and then it trends down for a while, and now you're down 50% on a position that you might have massive conviction in for the next 10 years. But is that 50% drawdown going to mess you up? It would mess me up. I know for sure it would, and I'll probably do things that I don't want to do. I'll probably be more miserable than I need to be, so I don't do that. Because then I'm playing a game of, based on my analysis and research, I think this is what's going to happen. No guarantees. I think this is what's going to happen. I just in a trading mindset, I think that's a tough place to be. Now, you hit a couple winners, you hit a couple massive winners like Tesla Tesla many years ago or whatever, Apple 20, 30 years ago, Nvidia a couple years ago. I mean, you could have hit some of these and they make your entire career worthwhile. But on the flip side, those aren't going to come every time, all the time, you know? And so I just find that the trading approach is better for me versus a fundamental approach. So I just leave it as numbers. I leave it as stop losses. I leave it at levels versus that invalidate my thesis versus, because then when does your thesis get invalidated? You have to listen to earnings reports. You got to know what you're looking at on earnings reports. Like that's what invalidates your investment in these companies from a fundamental perspective, not, you know, some level breaking down, because you can't care about, you know, some level breaking down on Apple or whatever. If your conviction on Apple or whatever stock, you know, maybe the next Apple that you believe you found, your conviction, you know, is not a price level. It's not a price level. It's more than that. News risk, bankruptcy risk, concentration risk. Yeah. Oh yeah. Research firm releasing bearish reports. That'll get you too. That's the funniest part. When you get like a freaking short report and you're like, oh, fuck. Like I have had that happen so many times back in like 2020, 2021, those days of like small caps when, you know, everyone was so crowded in these names, when everyone was in the same stocks and stuff. And because everyone was in the same stocks, all it took was one short report to come out and you had a massive panic sell across. The thing would drop like 20% in seconds and you're like, oh shit, you know, and you don't have a stop loss and you're like, oh, what do I do? And then like, you know, it's a mess. It's a mess when that happens. Let me check in on my small caps here. PIK, not much doing there. Not much doing. Well, not much doing in small cap land today. Not much, which is not a bad thing. For the ones I'm holding, specifically. This Amazon, okay, here's my thing. As much little risk, I think a little risk here. Looked good a little bit ago, and not so much anymore, right? I would like it over 149 by close. It doesn't look like that's going to be the case. Not bad, but don't love it. Don't love it. And the thing is also, too, right? Here's a part of the game of, and I'm okay. I'll risk my level that I originally had in place, so I'm going to leave it for now. But on something like this, right, you got to think, too, like, here's Amazon's chart. And then here's SPY's chart. Right? SPY is blasted off. Amazon is not strong compared to SPY. Now that can change. But right now, SPY is stronger. And so when I see that, I think I in the past, it's kept me more skeptical of moves, because ideally, I'd want to be playing the stocks that are breaking first, the stocks that are breaking out first, because they're the strongest ones. This is not. So does it mean that it doesn't work? No, it doesn't mean that it doesn't have to work. It could work. But because it's set up the same setup, whatever. But it's like, based on what I'm seeing so far today, it wouldn't surprise me if this didn't work. Is that the reason why? No, there's no way to know. But it's not super strong compared. Like at a minimum, would like to see it closing up here. Would have been really good. But still, even if it did, it's still not as strong as SPY. So, you know. Yeah, we'll see how it closes out. But, you know, tomorrow's a new day. We'll come back at it tomorrow and see what happens. If this move holds, you know, overnight, we'll see. I'm curious to see what ends up going down, right? Does the move stick? And do we keep pushing? Do we wake up tomorrow morning and SPY's gapping up to 473, you know, and we're like, oh shit. I don't know. There's no way to know. Missed on the IWM, which would have been nuts, but everything is up across the ETF list that I've got here. Pretty much everything is up. Adobe's down. Adobe has earnings after hours. Google's just about flat. Meta's just about flat. Microsoft's down a little bit, 0.5%. Coinbase up 6, almost 7. Whoa, there it is. Is that tradable? Not as fair. I think it's a fair play. I'm not going to play it because I have my Bitcoin exposure ready, but I'm actually technically still in a Bitcoin trade, so I'm going to leave it alone. But tradable. I think it's if that for me, it would be a valid play. It's breaking out right now for a swing. So stop loss would go to the problem is it's a big stop. It's a wide ranging stop. And it's up humongously. So the probability of these moves continuing to push, it's going to slow down eventually. But totally could work. So entry would be like, let's say your entry would be here. Stop loss under today's lows. 2-to-1 risk reward just to kind of gauge what the range would be is up towards 173. It's a big move. We'd have to move almost $25 more on Coinbase to hit that target versus stop loss would be about $13 of downside roughly. So that's a wide move. Now, in this extension phase, you size, if you size accordingly, it's not that big of a deal. But that's tradable, I think. It's a valid breakout. Bitcoin's up 3.25%, having a decent day. I think if Bitcoin, I like to go to the source, versus Coinbase, you're playing a game of, I got to play with Bitcoin momentum, S&P momentum, NASDAQ momentum, risk on mentality, the dollar, too much shit. Versus Bitcoin is going to do what Bitcoin does. So I would just go to the source, play the breakout on Bitcoin, which I did, and now here it is. Leave it alone. Let it do its thing. So keep it simple sometimes. Most try to keep it simple all the time. Not just sometimes. I did have a trade on. I'm not going to do a trade recap because it was the break-even trade. So I could, but it's not worth it to me. It's just like it's a waste of time. It's for whatever. I did trade NVIDIA today, earlier before Powell. It was this morning, and thought it was good, and it was, but I moved my stop loss to break even after the move, and that was it. So I was looking for it had to go like another $1, like a little bit, like if NVIDIA went to like here, I would have gotten taken out. Got close. It was this breakout. So push up, consolidate above a VWAP, break that north to the upside, broke out, got a push. As it pushed up here, had this upper wick, I moved my stop loss to my entry, which eventually got hit. And then I was like, I'm just like, again, it was one of those things where I'm like, Powell today, who knows? Maybe this thing's going to go. Maybe it's not. Who knows? Chart looks good. We'll play it, but now that we're up, like a 1-to-1 risk reward here, let's not lose. So move the stop loss to break even. We didn't lose, and no harm there, but didn't really do. It didn't even get there later on, which is funny with how much further SPY went today. It's funny how NVIDIA did not make that push. It's actually looking pretty weak compared. That was it. So when I say I was a break even, like it literally was 0 P&L. Like it literally was break even. I made the stop loss to the point where it was a 0 trade. Not even a loss of $1, not a gain of $1, literally 0. Don't want to fuck up the stats. Because if I made it lose $1, then it would fuck the stats up and make me look like I'm, this crazy. All my trades are super low risk and super high reward compared, right? It would throw the stats off. Not a big way. It would all average out by the end of the month, but just kind of me thinking like, let's not fuck the stats up. Short Amazon 148.66, covered at 148.13. Nice. Looking at Labo now, regret selling too early. You never know, man. You never know. XBI on an absolute tear right now. You got the perfect storm of, geez, man. Holy crap. It's up freaking 5%. Who would have thought Who knew, right, that today was going to be the perfect storm of the 10 years going to plummet. The dollar's going to plummet. The S&P is going to rip. Powell speaking that, essentially they're done hiking and that rate cut says, where the consensus is for next year. And now the market's in full-on race to price it in. It seems like. I'm just kind of making up a narrative. I don't know if that's the reality, but that seems like the market's in full-on figure out how to price this shit in as fast as possible, rip it up, go, go, go. Because the Dow is hitting all-time highs. So give me 1 second. We're good. Had to close the door for a second. Might sure Amazon again now. What's Amazon at? Heyo, 148.76. Maybe after all, we're gonna close where I want to close. I want to close over 149. I got a minute to do it. It's got a minute 45 seconds to do it. It's gonna be close either way. Volume is not the best, which is a little concerning, but not terrible. SPY is looks like it's trying to close over 470. Oh man, geez. SPY came back up. That was a valid setup. No, I think it was. It was. But it technically kind of did work, but like it didn't hit what I wanted to see, like roughly a 1.5 to 2 to 1 risk reward to start taking profits and on that trade. And I didn't play it very large either. So it's like it's not worth selling this to make $50, on a failed break versus just leaving it alone. So we finish up here. Amazon closes at 148.82. That's actually a lot better than what I thought it was going to be. Am I up from my entry point? I believe I'm around my entry point on it. I am flat. I'm literally flat on it. So I'm exactly at break even, which is totally fine. So that's the only new position that I have that I bought. See what happens. But let's see. I believe there'll still be some adjustments to the volume here in the coming 15 minutes. But either way, SPY with a nice, nothing insane, but it did have better volume today than the past two. So notable. Check back in a couple, later on tonight, and you'll get better, more accurate numbers. A little perk on QQQ volume does look pretty good. IWM, I think, was a very nice volume day. Yes, very, very nice volume. Oh my God. Is that real? Look at that freaking candle. Holy shit. IWM up 3.5%. It's up $6.60 today. Jesus. That's insane. Jeez, these candles are nuts. TLT at almost 97. Oh, TLT is pushing back toward $100. Don't look now, but it's making a move. Yeah, that looks pretty good. New highs of this rally on that. XBI finishing up 4.9% at 84. Holy shit in my mouth. This is insane. You ever say just shit like that to yourself, and then if people actually heard what you said, they're like, what the fuck is this guy saying? I do this all the time. 69 on the fear and greed. Not totally there, I think. Put call ratio came back a little more. Okay. Yeah, that candle is better than a doji on Amazon, I think. It's a little bit better. Not as little upper wick. The thing is, the upper wick, I believe, did that come this morning? Did that high hit this morning? I think it did. Yeah, it did. So if you go off to the afternoon, really, it pretty much held VWAP, which is good. The pop came this morning, So I don't know. We'll see what happens tomorrow. Stop loss is going to be under today's low. See what happens. Not a massive size. If it works, cool. Doesn't work. We'll be on the hunt for something new, but really there's not much that I'm super oh my God, I got to find something. So maybe the rest of this week is to kind of leave it alone and chill on my positions and what I see. Yeah, I do say a lot of weird things sometimes. If you had seen me or been around me in college, you would know some of the shit that, during times where you're studying for exams right now, for those kids who are going through finals. My brothers just finished finals today at UGA. Don't miss those days. I don't miss those days one bit. But all right, so that'll do it. Let's check out FinViz quick and wrap up there. So you had an 82.9% advancer day. You had 85% of stocks at new highs versus new lows. 77.7% of stocks are above their 50 moving average and 63.2% above their 200 moving average. And yeah, very clear strength in the Russell versus the rest of the board. So we'll see. Shorten the Oh man, let's check out the portfolio quick too. So holy freaking shit. The portfolio finishes the day up 4.8%, $676 in the green. We got to sell some stuff here. Yeah. Yeah. Well, we're gonna. If this move holds into Friday, we're gonna get out of Jets. We're gonna get out of Labu. So we're gonna get out of a lot. I'll be out of a lot. Not a lot, but I'll be out of some. And then we'll start thinking about maybe selling some TMF, maybe selling some, we'll get rid of Bido soon. Getting a little more aggressive on the ARK covered call front. We'll see about that. Getting, yeah. So that's the plan. That's the deal. Thanks so much for watching, guys. Hopefully you had a great Wednesday. It was an exciting day for sure. Now, will the move hold? We'll check back tomorrow and we'll find out. So thanks so much. I'll see you guys in the next one. Peace.